Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Yo, what's up guys? It's your boy Kool-Aid Man 100X. Welcome to Black Money, Black People. Listen, we're going to be reviewing Dollar General. Let's jump into Dollar General. What we're going to be reviewing. The first thing I like to see is that this company pay you out dividends, because I like to put something in so you can get something out. So that's what you want to do when you actually investing into a company for your full portfolio for long term. You want to make sure you put something in before you get something out. So that's what we want to do. So what I did was I plainly typed in Dollar General pays, and they do pay a regular quarterly dividend, which averages the dividends of $2.36 per share, which is currently approximately 2.3%, which is pretty decent. So what we like to look at is the hiccups that you want to get when you actually investing into Dollar General and understanding how the actual growth works. So what you want to do is for the quarterly, they pay out frequently or quarterly, which is pretty much like every year, basically, pretty much every 3 to 6 months, basically. So we like to see, when we're looking at dividend payments, we like to see, does it change or does it actually hiccup, go up or down? Or when you see a dividend grows, usually the company grows. So when they start paying dividends out, it was like 42%. So we getting 42 cents. So it started climbing. So, and it actually been stagnant, which is very good. So you actually got a company that pay out dividends and can keep a dividend actually at the same rate for the past 2 years, 2 to 3 years, basically. So 2022, they actually started going up. So 2023 to 2024, they've been stagnant. So this is decent. So you can actually invest into this company and you can actually put something back in it. So every year you're going to be getting a dividend. So that's really good if you want to invest in Dollar Tree. It's going to cost you $105. So be wary of that. But you know, it also for the dividends. So you can definitely look into this, adding this to your portfolio if you want to. Just saying, totally up to you. So let's go back to the thing we have here. So the thing we have here is that we want to understand when we're looking at the charts. So I got a structured script. So we're going to be going through this one by one. So Black people, listen. When you're investing into a company and looking at the charts, I always like to see the first 6 months, 1 year, 5, or max, either or. So the first thing I like to click on when I'm looking at the chart, I like to look at it as 6 month value. So we look at a 6 month value. They've been doing pretty good, but they actually took a very big hit here. I always look at the big hits that they take, which is around that May 2026. So this year has been pretty bad, but they had a capital gain of 3.89%, which is decent. So I guess that was later on, some took a hit there, so we can actually look into the hit that they actually took. So let's look within the year. So what did they actually give us in the year that we actually uptick? So we're seeing that, yeah, May is probably being their worst time, even through the tough times with the pandemic and all that stuff. They did pretty good. But they took an uptick in the first January to March. Everybody started buying, but now we're seeing the actual raw numbers. That May is pretty much, in the rest of the year, is probably going to be their lowest. So decent, not bad, okay. So we're looking at 5 years. This is the problem. So if you own the company for 5 years and you see the red, that's not good. So they actually took a drop of 47%, which is not good. We don't like to see those drops. So something they doing ain't right. But we about to look into it. So we actually took the drop there, 47.97%, which in the 5 years. So max of the overall company, they do pretty good. They actually took 364.80% uptick. So not bad for, you know, the max years of the company. But that 5 years is kind of suspect. So we're looking at the next 5 years, will it still be in the red? I don't know. So let's take a look at the financial section. This is where it gets good and greedy. So we're going to look at their net income, which is kind of crazy. Their net income for the revenue for the financials, we're going to look into the cash flow of things and the net income. The net income as a year, 391, 411, 282. How? Wow, that's a big drop within May of August of 2025, October 25, 282. Then you uptick to a 426 mil in 2026 of January. Interesting. Probably competing with Dollar Tree, Five Below, and all that other stuff. So, yeah, I can understand that. Cash flow operations is 815. So, wow, they spent a bill for operations. Wow, that's a lot of money to spend for operations for a company that's only making a net income of 426. So, how are y'all getting the money to pay this down? Interesting. So we look into the change of inventories. So the change of inventories is, this is where it gets interesting. Change of inventories, one, they took a negative hit here. Then they took another negative hit. This is in the same year. And they come out of the hole. Dollar General, what y'all doing with your money? That's not good. The next one is going to be cash flow from investing. Let's look at the cash flow from investing. So where is that? Cash anchorage, net cash flow, financing. Cash flow from investing will probably be another one. Here we go. Cash flow invest. Ooh, negative 2029. Oh my God, negative 401.3, and y'all still in the hole. So y'all don't own anything. Y'all don't even got no cash from investing. So we gonna figure this answer out when we go a little further. Let's look at the finance. So what y'all paying? Financing. God, oh my, 630. Oh God, what? It's negative 735 million. And you just coming out of the hole just 100 over? What are y'all financing? That's not good. Free cash flow. Please tell me y'all got some money. Y'all started off at 596. So this is the most y'all got right now is free cash flow right now. So y'all got money coming in. Decent. Unlevering. This is stuff that sits in your account. Y'all just, okay. You started off with 5, went down, went back up to 6. Now you're at 49. Now this is interesting because your cash flow is 6, so you're just making the money and spending it on the financing. So y'all money is going into y'all trying to get out of debt, basically. So how are y'all paying dividends? That's interesting. How is that working? I don't know. I guess y'all trying to get people to invest more to uptick the company for long-term use. But God, I don't think this would be. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my Zero Investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Some long-term use. Is it? I don't know. Let's check the balance sheets. Man, that's where we get the nitty gritty, basically. So inventory. So balance sheets come with inventory. I really don't care about this, but inventory. Y'all got 6.9, 6. Y'all always been balancing the inventory. So why y'all stuff not selling? This is not making any sense. You got the inventory, but you're in the negative as far as the assets and financing. So how do y'all have so much inventory but no net income over that 5? It's not making any sense. If I'm not mistaken, that cash flow for the net income is 426, but y'all got over 6 billion in inventory. Why y'all not selling anything? I don't get that. That don't make any sense. Total current assets, 7 point. Now this is where it's interesting. Y'all got inventory. Current assets. It's crazy. Y'all started off at 8.30, 790. You lost some of it in this year. Your current assets, which is decent. That's good that y'all are out there investing. But God, all this inventory. Why don't y'all sell that? Sell it. I don't understand why y'all not selling that inventory. That's not making any sense to me. The total other long terms, I can't even get over what y'all doing with y'all money as far as the long term effects of this. The total other long terms is like, assets. So let's see what y'all got. 55 million, 55, 56. So y'all got stuff invested long term. That's okay. I like that. The current expenses. How? 1.3 bill, 12 bill, 13 bill. Y'all just got the whole. Y'all just got the 808 bill. I don't get this. Why y'all total expenses are so high? Y'all more than Dollar Tree, and that's crazy. And they own 2 companies. What are y'all doing? That's another thing. Total assets. Now this is interesting. 99 billion, 31, 65 billion, 31, 72 billion, 30, 96 billion. Y'all have all these assets. I'm not understanding. For the total assets. If y'all got so much inventory and assets, why are y'all making a higher net income than what y'all expect it to be? Interesting. Let's look at the earnings. So this company is a little bit different. So we had an uptick in the 10 billion. Q4 has been their best year, basically. What I like to do is the uptick. So over time, Dollar General will be good, but the massive hits are small, which is interesting because they got the assets and the inventory. So it's like a slow, how can I pull it? Methodical company. I'm about to say company. A slow, methodical company because they only had what 1, 2, 3, 4 bad downticks, but within the year they've been going up, which is crazy. Either which if their financing so high is because they own their properties. They're not renting, so the financing the properties. So what they're doing is financing, bam, put it back in another 10 years. So they're making that money and they're buying the assets on top of that. So will we see Dollar General be sold in the future? I would say. I'm just saying because they're already at 105, they're way higher than what they expect it to be. So we're looking at that type of ordeal. So when you're looking at the spreadsheet of this company, it's not good, but it's good at the same time for the long-term jeopardy of the company. But let's look at the key issues on Perplexity. So when we're looking at Dollar General, this is Dollar General in case you want to know. I always look at the bullish review and they have sources that you can go to. Despite the cost of Hanwha Jefferson maintains to buy a radical 159 price target. That's their price target, which I actually see them hitting. They can hit that. They can hit that in stocks. They're already at 105. I can see them hitting that, but it won't crack. If it crack 120, that would be surprising because their financing is crazy. I don't know how would that work. But the pricing power allows it to absorb the pass-through cost procedures and continue to attract trade down in consumers. So this is, Dollar Tree is not long-term. They're a trading company. It's a company that you trade, not invest in. That's crazy. The Wood Research has the price target at 135 to 157. 135 to 157. I won't even see them cracking 25. I want to see it. Citing the raise the fright cause of the drag on the profitability, which is the Rothschilds. Now this is interesting. The Rothschilds on Dollar General. Interesting. Did not know that. Lowering the target to 90 and maintaining the sales rate, reflecting deep concerns and other sustainable margin compressed as like cost of pressure. So Rothschild got something to do with this way deeper than what I expected. So the Wolf Market invested into the research of Pride and Dollar General. It goes from 135 to 125 would probably be the highest it will crack, but that's either 10 to 15 years down the line. I wouldn't even see this cracking a 157. Dollar General, we don't even see Dollar General being mostly popular as Dollar Tree is, as far as the events that have been happening, you know. But depending on the same congested system, yes, they both have the same system, but Dollar General owns their properties, so we don't really hear a lot of things about Dollar General. It's just they're mostly in the market side of things, you know, groceries and stuff like that, fruits, stuff like that. So long-term investments, no. Trading, yes. Investing in them solely, no. Trading on.
What is an analyst consensus? Analyst consensus refers to the average of different analysts' estimates about a stock's or security's performance, particularly regarding future earnings or financial metrics. It is an aggregated estimate that helps investors gauge market expectations and is crucial for financial communication. This consensus can also assist in identifying forecast errors made by management.
On a low or high capital, yes, but that's my only issue with this company. So we're going to be looking into the analyst consensus, which is give us a thorough decision on what we want to do. So let's go back. So what we're going to do here is in May 24, the analyst consensus of Dollar Tree is generally a buy. Now, this is interesting. They consider a buy, but the moderate buy and hold due to the mixed statements regarding near-term growth. So just like I said, as say long-term outlook, average of 12-month price target, and the consensus of it, but the consensus rating buy, moderate buy. So it's a company you can invest into, but it's a company for traders, not a company that's long-term. But it can be a long-term value as far as the dividend is concerned because you're putting in what you put out. So that's good. But that price of 105 is not going to be doable. So you getting paid the dividends of, you're looking over, which is good. You're getting paid 59 cents a share, but a share is 105 or 65. That's $200 you're putting in, but you're only getting $1. I would say a little over $1 back every 3 months and quarterly. So it's really nothing I would invest in, you know, long term. But as far as you being in the index fund ETF, knock yourself out. But this is a company I want to invest in long term. As far as Dollar General. This is a company that's made for traders. This is a company that is thoroughly based on long term, but it's a risk. This is a company that actually finance a lot of things. They get in a hole, but they get out of it, but they keep a steady, consistent revenue stream, cash flows revenue, finance revenue, because they own their property, so they're paying for that solely. So whatever they need repair, they repair on their own. So they don't have no renters and all that. So that comes into place. Moderate buy, invest. No. Long term, no. Trading, yes. Portfolio, no. ETF, index, yes. That's what I would look at this company as, but anything else, no. But if you're trading, knock yourself out. Dollar Tree actually got a big uptick as far as trading. So I can actually see them breaking at least 125 a share. But as far as you long-term investing, no, this is just a waste of money. So I hope you enjoyed the video. I'm going to catch you guys on the next one.